You know, folks, Charles Payne is one of my favorite guests on TV and radio. He's just a stand-up guy. He doesn't mess around. He knows what he's talking about. And I wanted to bring him on the program this evening. He's got a brand new book called Unbreakable Investor. And you can get it at unbreakableinvestor.com, and we'll have that on our social sites. Charles Payne, welcome to the program. I wanted to have you on to talk about your book in the context of this. You see what's going on in our country. You see what's going on all around the world. People are probably very nervous about their own security, including their financial security. Unbreakable Investor, under circumstances like this, when the economy is kind of going to hell, and you see all this breaking out, what is your advice to my audience?
The advice is to stay the course, but do it very smartly. By the way, thank you for that great introduction, Mark. I call myself sort of the Pied Piper of the stock market, but I don't promote the stock market. You know, the stock market to me is like going to the mall. You don't go into every single store in the mall. It's a place to exchange, to buy and sell stock. My big focus is on people, the audience, your audience, investing in companies, becoming part owner of great companies, particularly when their share price are undervalued. As bad as things are in this country, we'll still be a $23-25 trillion economy. There will clearly be companies out there that provide services that we all want and we all desire. And so I've been doing this for close to 40 years as a broker, as an analyst, with my own research firm. And I've helped individual investors for close to 4 decades. And, of course, people now stop me in the street, and invariably they always say, I'm not in the market. I'm afraid of the market. And, I always look at a market, and they're wearing a Nike shirt or a hat with Caterpillar on it. I'm like, well, where'd you get that hat? My grandfather gave it to my father, and he gave it to me. I'm like, you know what? You guys love the company that much. If you owned the stock when your grandfather gave your father that hat, you guys would own half of Manhattan. So, listen, these periods were... These periods that we're going through are tough. In my book, on page 63, begins the chapter, Geopolitics, War, and Conflict. We know there are going to be these sort of ups and downs. Essentially, though, humankind wins out. I mean, what we saw over the weekend was so barbaric. I get goosebumps, honestly, right now at this very moment thinking about it, and that people, human beings, are still capable in this modern age of doing that to other human beings. And we're going to prevail. Humanity is going to prevail over that.
Well, I think if we're vigilant, pretty much if we're steady, like you're talking about investing, stick to your principles and keep pushing, and don't be diverted from your focus and so forth. The average person out there who may not be in stock, but they have an IRA and they have a 401k. Maybe they're in government instruments or something like that. Is that a smart thing?
It's a smart thing if you don't want to do any work. This is my 3rd book, and this is a companion book to my prior book, and it's a fair amount of work. It's not a second job, and it's probably on par with someone who does fantasy football. And you have to ask yourself, do you want outsized gains? The kind of gains that can change your life. Really, it's not a get-rich-quick book. But my whole thing, and I start the book off with an ode to my grandparents, Mark, who owned a farm in Alabama, bought it in 1951. And, you can imagine they had pretty tough time. Anyone who owned a farm down there had a tough time, but a black family who saved up. But I just want to read you what they took to have their piece of the American pie. Just a little bit of the deed. So they gave over everything, unencumbered, no liens. One red horse mule named Red, one gray horse mule named Jack, one 2-horse wagon, one hay mover, one hay press. They gave mixed cattle, 9 head of mixed cattle, one black sow hog, all of these things they gave over just to have their own piece of the American dream. And so when people talk about risk, when people talk about It's one thing to say I can't do it or to be intimidated. The industry is designed for everyone to be intimidated. So you hand your money over to a so-called expert, which is fine if that's what you want to do. But I am of the firm belief that if you buy and own great companies and manage your portfolio, that you can build a foundation for the next generation.
Mm-hmm. And taxes and so forth. You write about how all these implications affect what's going on. The Trump taxes are going to be lifted in about a year and a half. Tax cuts, that is. So how do you plan for that? What do you do? Do you do anything?
Well, it depends on who you are, what tax bracket you're in. From an investing point of view, again, this is why you look at individual companies. Many companies are smart. They're doing different things to take advantage, or not take advantage, but to get in front of that, so to speak. Really, the bigger issue right now, to be quite frank with you, is the government spending. This is the biggest threat to the stock market and our economy and our prosperity. We are now at the point where Wall Street can no longer ignore what's happening in Washington, D.C. Yesterday, they auctioned off 10-year bonds. It was an unmitigated disaster. Today, they auctioned off 30-year bonds. It was a far worse disaster. The stock
what does
market
that mean?
Rallying.
What does that mean?
So the government raises money by offering these bonds, which are promissory notes. Sometimes you can hold them for 5 years, 2 years, 10 years are the most common. Those are the ones that are held by most people, and then 30-year bonds, and then they auction them. So they went to auction them today, and there's hardly no buyers for them. And because there's no buyers, they have to offer higher yields. And this higher yield, higher interest rate environment is what's destroying everyone. The house you could have bought a house for $500,000 4 years ago, 3 years ago. The same amount of money and the same monthly payment, you might be able to get a house for $250,000 right now. The American dream is being trampled on, but the problem is our government is spending at such an incredible rate right now. And again, there was a time when Wall Street looked the other way. Mm-hmm. They can no longer look the other way because the buyers of our bonds, the Federal Reserve was the main buyer, but they can't buy anymore. They want the economy to come down, so they're not buying. After that, Japan was the number 2 buyer. Well, Japan has its own issues, and now they're letting their yields go up. So Japanese buyers are now saying, hey, I'll just buy Japanese bonds. China's been an aggressive seller. Brazil's a seller. Saudi Arabia is a seller. There are no buyers for our debt.
Now, I want to hold you over. I want to remind people the book is Unbreakable Investor. You go to unbreakableinvestor.com. It's on all my social sites now, all the platforms. That's where you get it. We're here with really a good man, Charles Payne. His book, sometimes people write books that are sort of theoretical. I know I've written some. Or they write books about themselves and only about themselves. And maybe you don't get a whole lot out of it. This book, you're going to get a whole lot out of. If you have a home, if you have a loan, if you have a credit card, if times are tough, if you have an IRA, a 401k, this is the man, this is the book. Unbreakableinvestor.com, unbreakableinvestor.com. It's on all my social sites by our friend Charles Payne. So I read a piece, Charles. I forget what it was. It was a prominent business site. And the gentleman was writing things that caught my attention. I read it to the audience, which is this. Interest rates skyrocketing. The Fed's going to push them up more to try and deal with fiscal policy where the Congress just keeps spending and spending and spending. So his point was, with interest rates going up and going higher, we have inflation-oriented spending that doesn't want to stop. In fact, it wants to increase. Congress wants to increase it. And then we have individuals who have less savings than in recent times, who are really being pinched on the basics. And he says, I'm concerned that the elements are coming together. And my concern is this. When we had a similar situation with inflation from Carter and Reagan took over, Volcker pushed up the interest rates, but Reagan slashed taxes because his view was you can't choke off the economy altogether. so people have money in their pocket to spend, and you grow your way out of this while trying to control the monetary side. But we're not doing that. What's your take on this?
Well, I think you laid it out perfectly. So, and before the break, you mentioned the Great Depression. So let's go back to that, because we're in a position right now, Mark, where we can have a roaring 2020s and amazing prosperity for Americans, or we can go into something that is extraordinarily ugly. Back then, the stock market was on fire, and the Federal Reserve went into action to slow it down, to slow down the economy, just like they're doing right now. And they went too far, and the stock market crashed. After the stock market crashed, people panicked. So you had four distinct panics that runs on the bank. We had a run on the bank earlier this year, Silicon Valley Bank, which is one of the biggest banks in the country. It was. And they ran into trouble. And, of course, they were bailed out. They weren't bailed out. Their depositors were bailed out above the 250,000 level, because they're the elites of the world. They're Silicon Valley, right? These are the top donors of the Democratic Party. If it was the Bank of Montana, the Bank of Bismarck, they would have just let them go out. And whoever had more than $250 to 50,000, too much, too bad luck, right? So this is the scenario. Because President Biden tried this thing called modern monetary theory. This is the notion, or theory, that because government can print money, why does it limit itself? Why doesn't it cure all the things that ail the nation? You need a house, we'll print you the money. You want something, we'll print you the money. Just print, 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 print. And maybe if there's any signs of inflation, tax the rich. We lived this experiment. And I always equate it to the movie The Hangover. It was fantastic for a while. You look in your mailbox and there's another $1,400. It's like, okay, let's go to the mall. And on top of it, the president of the United States said, don't pay your rent. Don't pay your student loans. Take that money and go to Cabo with it. So, yeah, the first year the economy looks phenomenal. Nominal growth is through the roof. But then we are living the hangover, which is deadly, because no one knows how to stop it. We've never dealt with this kind of money before. I mean, this kind of problem. So now, money supply. We've never had this sharp decline in money supply. And one of the reasons for that is I mentioned bonds earlier. What the Federal Reserve will normally do is buy bonds when they mature, they'll buy more bonds. Well, they're just letting them mature. So they're sucking money out of the economy. But the problem is the fiscal policies you mentioned. They won't stop spending. So on the other side of this, of course, is people got sucked into this. People who had student loans and didn't pay them. Well, guess what? They owe the student loan still, but now on average they've also added another $500 in debt. If you remember, maybe when Obama was in president, and this is something that was amazing, that Nancy Pelosi admitted this, that they wanted to increase the food stamps. And so when one of the reporters asked why, she said, well, it's the multiplier effect. The multiplier effect, yeah. If we give people $1 in food stamps, they'll spend $1.50. The same thing applied to all the programs that President Biden put in. So if I send you $1,400 and you go to the mall, guess how much you would spend? $2,000. $1,400 you got, and another $6,000 maybe on the credit card. So now credit card debt is at an all-time high, $1 trillion. Auto loans are at an all-time high, $1.58 trillion. Student loans are still at $1.58 trillion. Interest rates are the highest they've been, 22% on credit cards. Store cards are as much as 33%. So we've been having this big party, the entire country, and now it's time to pay. It is an ugly, scary, dangerous, and it's going to be a very painful lesson for a whole lot of people.
Painful. So the average person out there, or the people listening to this audience, how do they prepare for that if it gets painful?
Well, it's going to get painful. I just hope that many of them were disciplined. But it's going to be hard to see, because we have, and I've never heard this term before. I just heard this term for the first time after President Biden put all this money out there, all the stimmy checks, excess savings. I grew up poor. Anything we had extra, we put in the coffee jar and in the cookie jar on their pillow. I never knew there was such a thing as excess savings, but apparently there's excess savings. This country had $2 trillion in excess savings. That's how much money was pumped into the nation on top of regular savings. All the excess savings is gone. It's all migrated to the top 1% of the 1%. And then our regular savings rate is under 4%. On average, you need 11% for a healthy economy. So regular folks, if they bought into this, and a lot of people did, not most, a lot of people did, and they took those trips to Cancun, or they went to Miami for the weekend, or whatever they did to have a great time. They spent $3,000 on Taylor Swift tickets. It's a once-in-a-lifetime opportunity. Well, they're going to be in trouble. And what I hope, and I'm really, really concerned about, what I'm really afraid of, is that come election time, the offer will be, the Faustian offer from President Biden will be, hey, well, let's reload. Reelect me. I'll get around the Supreme Court. After all, I've mitigated Congress's power. Let me push the Supreme Court out the way, and we'll find a way to pay off those student loans. We'll find a way that you don't have to pay all of these bills. That will be the offer. If Americans buy it, then guess what? We deserve what we get.
And it could get very, very ugly because, by the way, I want to tell you this book. I strongly encourage you to get it. It'll help you make your own plans and understand what's taking place. Unbreakableinvestor.com, unbreakableinvestor.com. We'll put the link on all my social sites. I encourage you to get it. I encourage you to get it, to read it, inform yourself, and perhaps do something that can help you in the years ahead, whatever happens to the economy. And I trust nobody better than Charles Payne. So finally, Charles Payne, I have this question for you. This is not a book you can get at a normal, although many of them are abnormal, retail outlet, right? You can go to this link, and where else can you find it?
It's just mostly there. There'll be some copies on Amazon, but they'll be overpriced. The book is free on the website, but people do have to pay for shipping and handling. That's
amazing. You said the book is free on the website? You just have to pay shipping and handling?
Right.
I already got one free. I didn't even have to pay for shipping and handling. But, folks, shipping and handling...
I'll get you the hardcover copy when it comes out.
Thank you. Unbreakableinvestor.com, unbreakableinvestor.com. Get your free copy. All you have to do is pay for shipping and handling. I don't know. It seems to me I'd run to the link and make my order and get it. And I want to thank you. You're always a terrific guest. You're always rock solid, understandable. And my audience loves you. So thank you, Charles Payne, and God bless you, my friend.
You too. Thank you so much, Mark.
All right, you be well.